Here on The Colour of Country Life, we're catching up with Market Check with commodity advisor Lachlan Condon. How are you, Lachlan?
Yeah, good, thanks, Ricky. How are you?
Great, thank you. It's been a great year and a bit talking about what's going on in agriculture and great pricing for our farmers. Input costs a bit of a challenge, but how are things looking for our product when it comes to grains?
Yeah, things are looking really good. Across the board, we're looking at, a third consecutive big crop on the East Coast, and that's obviously second to third big crop in parts of South Australia as well. Obviously, parts last year weren't as strong as they could have been, but hopefully this year, across the EP is looking really good. East and South Australia is looking much better than this time last year, and then the YP sort of is tracking along nicely as well.
Yeah, I heard that it's still a little bit dry, as you expect in the Mallee somewhat. They could do with a little bit more rain. Maybe that fell in the last 24 hours from what we've seen.
Yeah, there was a bit of rain that fell across the Wimmera anyway. I'm not too sure about the Mallee, but those sort of sandy countries don't need too much more rain before they finish a crop. But I've heard that it has been quite dry. So fingers crossed that they can get a little bit more rain.
Has been fertile ground for pricing for in the South Australian end of the neck of the woods. Even some Victorians and New South Wales farmers sending their product across there to take advantage of it, from what we're hearing.
Yeah, definitely. And that's been the really refreshing thing to see the last few years in the South Australian market. They've put a lot of money, or there's been a few sort of newcomers into the export market that have bought new infrastructure. And with that infrastructure has increased and improved the export capacity of South Australian markets, basically. So what we're seeing is South Australia now at a sort of $5 to $10 premium over some Victorian sites, and that's largely to do with the greater competition for export that we're now seeing in South Australia.
Yeah, it's a refreshing insight. It's one that we can easily miss sometimes, is when infrastructure is invested in, say Murray Basin Rail keeps getting kicked around in the northwest of Victoria, it can actually result in better farmgate prices for farmers due to increased competition.
Definitely, and that's what we're seeing sort of, and I'm sure a lot of the listeners have heard, sort of all the stuff that's going on with T-ports and whatnot, has caused some of the other sort of big exporters to need to sharpen their pencil with their bids. And you're looking, the benefit, you can see the benefit of that in South Australia, and unfortunately, the downside on the East Coast, when you've only got sort of one or two major exporters with little export capacity because of the supply chain issues, is resulting in worse farmgate prices for Victorian and New South Wales farmers. I suppose a lot of these exporters aren't incentivised really to improve the supply chain. There's obviously a few reasons for that. One is because their margin, obviously, the export margin obviously gets better with the worse the supply chain is. So, some of the exporters are making a lot of money exporting the grain because the margin is so great. But secondly, unfortunately, on the East Coast anyway, we're always 1 year closer to a drought, and in those drought years is sort of they're the reasons why these exporters don't want to pour too much money into infrastructure that might not get used sort of 2 out of 5 years.
So are you saying there's not really an incentive at the moment for them to push through this crop from last year? If they've got the capacity, there's no market incentive for them to not hang on to it?
No, sorry, I'm saying for them, there's not too much incentive for them to invest in new infrastructure. There definitely is opportunity and incentive for them to export the old season crop because there still is so much money to be made relative to where the offshore market is. So basically, they are trying as hard as they can, but the supply chain isn't allowing them to export more. And whether or not they will invest and improve the supply chain is up to them. But I personally don't think they will, because they're making so much money as it currently is, and an improved supply chain will probably result in a smaller margin for them, basically.
All the more reason for people to keep an eye on what you're saying from Market Check and check with their analysts about exactly where there might be the best place to get price for their product when they want to move it on.
Yep, yeah, exactly. Just feel free to give us a call at 0294994199 or just give myself an email.
No worries. Lachlan Condon from Market Check, thanks very much for joining us for an update on what's been happening on the markets this week.
Beauty. Thank you very much, guys.